In today's video, we're breaking down another clip from a BTC Prague over last week, this time coming from Mark Moss, where he's discussing the old rules of equity for businesses. But I'm going to cut through the noise and explain how this applies to you as an individual investor. So stay tuned. Hey guys, welcome back. Drip Coach here with Drip and Farm for property where we don't trust, we verify, and operate with integrity and transparency. So we're gonna play a couple clips from Mark Moss where he was specifically addressing like what businesses can do and entrepreneurs can do in regards to increasing cash flow or equity within their companies, basically all aligning with what MicroStrategy, now Strategy, has done with the Bitcoin strategy. Well, how many times can I say strategy? But basically putting Bitcoin on your balance sheet and using the company equity to buy more and more Bitcoin. Metaplan's done it. I think he said it's like now 120 companies global that have done this, and they own about 3% of the Bitcoin total supply. So the reason I bring this up is like, yeah, if you watch this entire clip, which I highly suggest you do, it might not make too much sense because he's talking specifically to companies and big businesses, but the playbook and the principles are the same even for the small bag holder. So let's jump into this first clip so you can understand kind of how we got here and where we're going and what the opportunity is. And again, this is also just another echo of Raoul Pal's Everything Code about how we only have a couple more years where we can still apply a familiar framework to the way the world works. But soon it's not going to make any sense, and the rules are being rewritten right now.
The sixth technological revolution that we've had in just the last 300 years. Now, the companies that understand this, and we'll talk about them, are able to jump on this and benefit from this while everybody else is going to be wiped out. Now, I'm calling this the sixth technological revolution. We see this pattern repeating for the last 300 years. About every 50 years, humanity experiences this quantum leap, where it rewrites the rules of business and power and money. I've spent decades studying political cycles and financial cycles and technological cycles, and we can see them going from the Industrial Revolution in 1771, where we had the first mechanized machines. We had steam engines, we had railways, electricity, steel, automobiles, oil fuels. We had microprocessors, personal computers, the internet. And each one of these cycles takes the world forward in a forward leap, but it also changes the entire economic environment and world that we know. Now, we're fully in the sixth wave right now. And to really understand what these waves are, you have to understand it's not just one single technology. It's always a cluster of technologies. It's multiple technologies coming together that give us new sets of building blocks to build things that we don't even know or understand. Today, we have two very powerful technologies. We have AI, which is completely eliminating the cost of human capital. At the same time, on the other side, we have Bitcoin, which eliminates human-controlled money. Now, both of these are working together. They're feeding off of each other. Smart companies are buying the only asset that AI can't create. And what we're seeing is a collision between infinite efficiency, when human capital costs go down to zero, meeting absolute scarcity. And
part he just mentioned about companies buying the only asset that AI can't create. You can also say that we as individuals should be stacking or buying or accumulating the only assets, not only that AI can't create, but that the governments can't inflate or confiscate, whatever other H you want to add to that. So again, the playbook is there. Like MicroStrategy started this. Other companies are copying it. You see the ETFs and BlackRock, Larry Fink saying that you should have, it's not a matter of having Bitcoin in your portfolio. Now it's a question of how much. Sovereign wealth funds, countries adopting it. There was this recent post from Telegram that had something about Texas acquiring or using where is that? This is me posting one of the tips out here in Colombia. Where is this thing? It's about Texas going with making gold and silver legal tender. So it's like, that is nuts. Where is this? I may not be able to find it. It was just a Watcher Guru post, so I don't know what the actual article was, but that's letting you know that it's like, okay, the writing, here it is: Texas Governor Abbott signing law making gold and silver legal tender in day-to-day financial transactions. That is nuts. It's like, yo, we know that fiat is going to shit. We're going to give you guys another way out. You can now use gold and silver. So going back to the old tried and true, but who knows when Bitcoin becomes legal tender as well. Like, again, investing in something that AI cannot create. And I think Raoul Pal mentioned this as well. It's like, what do you think AI is going to be transacting in? I believe Bitcoin will be the monetary base layer. You can make arguments for maybe some other layer twos and programmable smart contract platforms, but Bitcoin has been proven to be the most secure, most decentralized layer. So when an AI needs to spin something up or purchase something or make a transaction, it doesn't have a bank account or a social security number or a freaking physical ID. So it will instead actually have to transact directly on the blockchain. And the easiest way to do that would be Bitcoin, maybe on the Lightning Network. So that just tells me that the opportunity is here. Again, the big companies are showing you what the playbook is. And then, like he's saying, this double impact merging technology, it's going to become kind of a must to participate in or get left behind, which is this clip.
At DCF models. It doesn't make any sense. The current reality of the situation that we're in right now is that as AI is collapsing the cost of labor, our governments are continuing to collapse the value of our currency, of our money. And at the same time, we have Bitcoin now being introduced into these companies, and it's completely destroying all the Wall Street valuations. Most people don't know how to make sense of this anymore. And we either have to master these technologies right now or get built over by companies that do. But we're going to change that.
There you go. So he's talking specifically about company valuations, but the same premise applies to us humble sat stackers. It's like governments are still collapsing money for the day-to-day wage worker or the trillion-dollar Apple company. It doesn't matter. And Bitcoin is breaking Wall Street valuations because it's breaking how we understand money. This is the first time in human history to have a globally tradable currency or asset that never sleeps and can be traded liquid across every border. Like, that has never, ever, ever been an opportunity. So there is no playbook for this. You have to just dive in head first and try to understand it as it continues to evolve, because we've never had anything like it. So that means all the other models are broken. It's that Michael Saylor quote. He's like, yeah, when Godzilla steps on the playground, it's game over. Or like he always says as well, he's like, they're using backtesting models of what they're familiar with from economic history and systems, but it's the same as if you were fighting a war way back when with horses and trebuchets and, cannons, and then all of a sudden a B-2 bomber comes in. It's like, it doesn't matter how many horses and cannons you have with one B-2 bomber. Like, the models are broken. And that is the entire fundamental thesis for how they're evaluating everything. And they're trying to make their playbooks go forward. And it's like, you can't use the old information. This is also Larry Lepard. Is it Larry? Jeff Booth. Sorry, Jeff Booth. He's like, you cannot fix the system from within the system. You can't evaluate the system from within the system. You have to step outside the matrix. And all these are just kind of like tongue-in-cheek sayings until you really start doing your 1,000 hours of research on Bitcoin. And for me, it just started hitting earlier this year that I was like, okay, this now starts to make sense. It's like, you have to get the hell out of fiat. You have to unplug from the matrix and understand that the only way out is to unplug. And then you'll be able to see the solution from outside the system. Let's talk about these zombie companies real quick.
world and build businesses in this world. And the sad fact is, right now today, we're full of zombie companies. Zombie companies, they're dead men walking. Yeah, they're still alive, but they're dead. 40% of the companies listed in the Russell 2000 index are zombie companies. That means they can't afford to cover the debt service that they have. That's what that means. They can't even survive on the cheap money that we're getting today. But as these new AI companies start to get more efficient, these companies...
Let's just pause there, because that's exactly where the average day-to-day wage worker is at as well. They can't survive on the cheap money that we're getting. A lot of people are in debt. A lot of people would be considered zombie companies for themselves. So they're getting a paycheck, but that paycheck is not covering their bills. So they are racking up debt on credit cards. I showed you guys that article about people actually using debt for Uber Eats. It's like you don't even have enough to buy a cheeseburger. So again, this may not apply because you're not a company, but break it down and look at the exact same playbook from a personal level. If it's affecting the billionaire, millionaire, trillion-dollar companies, then what's good for the goose is good for the gander, so to speak. So it's like, if it's affecting them, then it's not long before you will have to make the same pivot. They're pivoting first. Remember, Wall Street and all this, the big money makes the moves first. So they're showing you the playbook. They're showing you the escape hatch and what you need to do. And speaking of that playbook, I'm going to show you this clip that he has in here that he's broken down, like what to do for these companies, how to change your current kind of valuations to make your company more profitable. He's kind of got this step-by-step playbook. If I can find out where the hell it went. Right now he's showing you the proof of how it's worked for other companies. Yeah, right about here.
They have structured buys that are going. This is the math that you have to understand if you want to do this. Now, if you want to copy this playbook for your own business, a business that you work for, this is how we do it. Step number one, we need to do an AI audit of our business. So what are we doing in our business? How do we acquire customers? What's our acquisition engine? How do we fulfill our product, our fulfillment engine? And then we need to map out all the processes, create SOPs. Then we can start to identify all the areas that we can increase AI efficiency. We can create AI automated systems. We could use Claude to automatically make like NAN automations for us, or we can hire someone to do that for us. First, we have to do an audit. That's step number one. If we can reduce our cost of operational efficiency by 50%, then we have that extra income. Step number two, we need to make a Bitcoin Treasury policy.
So let's break that down for the personal level. So what he's trying to tell people is like basically audit your business so that you can find efficiencies and ways to cut back and get more money in your pocket. So if you can save and use AI to automate, speed things up, get more efficient, cut back costs, whatever the case may be, then that means you have more money. With the more money, you can then go into treasury policy. Well, you can do the exact same thing as an actual individual. You can use AI to audit your checking, your savings, your daily expenses, all that stuff. You can get it to give you a budget, figure out things you don't need, find ways to be more efficient, cut costs, all that. Because if you can find extra money from your current day-to-day wage worker job, well, that means you can start taking that extra money and putting it into Bitcoin, not saving it in fiat, literally putting it directly into Bitcoin. That's what I showed you guys. I started doing a little while back, so that basically my entire paycheck is going into Bitcoin. And of course, moving to other locations is kind of my AI audit strategy to cut costs. I know that's not an option for some of you out there, maybe many of you out there. You're like, I just can't up and leave. Well, you got to figure out something, because the system's broken, and if you stay in it, you're going to be broke as well. So that was my kind of AI audit, and I use AI every day. But it's like, yeah, how can I cut expenses, and then how can I put the rest of that excess capital to work in a Bitcoin treasury policy?
So we need to decide that instead of holding cash that's losing about 10% of its purchasing power per year, we want to put some of that or all of that into Bitcoin. We want to commit to that. Now, this signals to the market that we're serious, that we're here to play. Step number three, we need to decide a capital structure. We want to be able to tap into debt markets and equity markets. Now, if you're a small business, you still have debt markets to tap into. There's all types of debt programs for businesses, credit lines, credit cards, business loans that we can tap into these debt markets and these equity markets and access that capital when the opportunity provides. And then we
So for me, this solution was getting a rewards card so that all of my monthly expenses go on that card. I collect points. For me, I prefer the travel, so hotels and airline miles. And then each month, I use my Bitcoin collateral to take out a loan to pay the monthly bills. Now, the key for this is to not get out over your skis. So ensure that you're not overspending or over leveraging your Bitcoin. So, and not getting into debt. So whatever you're spending each month, make sure you can pay it off with only 50% of your Bitcoin for collateral. So for example, let's say you're buying $5,000 worth of Bitcoin a month. You cannot spend any more than 2,500, and I would even recommend 2,000 so that you have a buffer, because you only get access to 50% to pay off that capital on the credit card. You can leverage and go, borrow more and spend more, but you're getting into a risky scenario. But the key here for companies is capital structure and leveraging debt instead of debt equity. So you can do the same thing with a credit card.
We need systematic accumulation. This is dollar cost averaging. All right. This is buying on a regular basis. We don't want to buy it all at once. We want to maintain that consistent Bitcoin yield, the market premium. Step number 5.
That's what I just told you guys. DCA every day. So you always are getting Bitcoin no matter what the price. And of course, you got some extra. You can put in some buy orders if you want to go a little more aggressive, but definitely dollar cost averaging every day, because there will be pullbacks. You want to buy the dips, and inevitably cycles are not broken. They may have changed in length, but they are still driven by human emotion until, as we saw earlier in this clip, AI gets involved and it's doing all the trading. Then the cycles will change. We don't know if that will be in 2030 or not, but as AI gets more and more involved, they're not going to be emotional. They're going to be specifically and structurally logic based. So until that happens, there will be opportunities for Bitcoin to pull back, which can put your portfolio at risk, of course. So that means you should be DCAing so you can top up with need be.
We want to measure and communicate. We want to understand what is our own company's metrics. How much is the business worth? How much Bitcoin do we hold? What is our accumulation plan? What is our yield? The companies that follow this playbook.
So for him, this last one is measure and communicate. Basically, how are you evaluating your economic wealth at this stage? Not in dollar terms, but hopefully in sats. Are you accumulating more sats month over month, year over year? And is your debt to sat ratio reducing? Meaning, do you have more sats and the debt going down because you're using fiat in a debt-based way, so that eventually you may not even have to pay that back. You could just roll the loan on your Bitcoin. So hope this made sense to you guys. Again, there is great value in clips like this. It may not make sense on the surface, and some of the stuff like Michael Saylor talks about might seem like it's above your pay grade, but I highly suggest you start digging into this and understanding what the $1 billion of wealth is doing, because you can swim with the fish and follow that playbook. All right, smash that HBO special, help a brother out, like, subscribe, comment down below, and until next time, live daily and achieve your impossible. See ya.